little bit of a bounce on the back of this cut. Was that a surprise?
A little bit, yeah. I mean, if you look forward, the RBA are very likely to cut rates again, and as they rebalance the economy away from exports of natural materials to China, the exchange rate has to fall further than this, probably another 5 to 10 cents or so over the next couple of years.
All right, well, we're off 15% since April.
Yeah.
So you say it's got a ways to go.
Yeah.
What, if anything, is going to support the Aussie?
Well, I personally think it's a bit of a one-way bet. I don't think anything's going to support the Aussie going forward, unless they hold rates for some reason in the near future. But I don't think the market thinks that's even a slight possibility going forward.
No forward rate guidance either from the RBA, which some surprised some. But as you say, expectations are for another 25 basis points.
Yeah.
All right. Eurozone. PMI is suggesting we're going to exit recession in Q3. We've got Italian GDP numbers today. Yeah. They look to be a little bit better than their expectations. Market not so worried about Berlusconi anymore in Italy. What are you saying on the euro?
Well, it's about how quickly we exit this recession, really. The market's pricing in that it is going to be Q3. So anything better than that should be reasonably euro positive. And it also depends on the ECB as well, whether they cut rates again in the next couple of meetings, because that is being priced in by the market as well.
Do you think they're going to do that?
I think personally they are going to hint at it potentially over the next couple of meetings, and whether the data picks up or not will be the deciding factor.
So what happens to the euro if we get if 25 is factored into the euro?
I think especially given that Mark Carney's going to announce that that sterling, or should I say the Bank of England, is going to keep rates very low. If eurozone are cutting, then that should be fairly negative for the euro going forward, I would think.
All right, and on the back of that, given the positive economic data, the front of most of the newspapers here in the UK are talking speedy recovery in the UK. Do you buy sterling on the back of that?
Yes, but beware that expectations are rising as well. So there's a bit of a double-edged sword here. Sterling is probably going to rise over the next couple of weeks, but I almost guarantee that it will get past the point where it's fairly valued, given that the projections going forward for the UK economy are looking good, but I think expectations will get ahead of that. So it could be an in and then out situation rather than a long-term buy and hold.
What are your expectations on the inflation report tomorrow?
Well, in terms of inflation, I think they're going to suggest that inflation is going to rise above target over the next couple of months, but it's all about forward guidance and what he says, whether it's hard forward guidance tied to something or other. Unemployment rate, for example, I think that's unlikely, but it's going to be a soft version of forward guidance, so rates are low for a year or something like that.